All right. Okay. Hi. Okay. Something happened. I think all is fine right now. Sometimes this setting goes off, right? Okay, great. I think everything should be fine. Okay. Good that I quickly did a quick check over here. Okay, but anyway, okay, no worries. You guys missed nothing. Those that actually got muted. Okay, I think right now is fine. I see the audio here is working. Okay, no worries for those of you who missed out a little bit. Okay, basically in front we always just do a very quick introduction. Okay, but I think everything is well here. Okay, good. Great that you guys quickly notify me, right? Okay, those on GoToWebinar, I hope you guys are okay too, right? I didn't receive any kind of feedback from you guys, but I think it's fine. Okay, so I was just talking about Bitcoin just now. Okay, and basically over here is that we are basing on the Elliott Wave perspective on analyzing this market here. Okay, so what we are seeing here on Bitcoin on a 4-hour time frame is that right now we are seeing this very clear from this high 1, 2, 3 push, right? So most of the time when we see a 3-wave done in a technical aspect like here, okay, that's what we call a corrective pattern potentially. Okay, and of course, if you take a look at this here, we are pretty much close to this Fibonacci expansion level as well, around 41,800. Okay, you haven't really touched it, but I think it's fairly close. Okay, so what I would say is you want to perhaps keep a very close watch on this level. Okay, 41,800. Of course, I wouldn't suggest you to buy in right now, but at the same time, I wouldn't suggest to sell it, okay, at this current development because price is already so low, right? And it's already very close to this reactionary price level around 41,800. So what I would suggest is pay attention to buy opportunity for those of you who are keen on Bitcoin. Okay, ideally what you want to see, if let's say this comes back down again, you want to see that first rejection up and then a flag pattern, okay, a simple consolidation. This might be the setup for you to get involved in Bitcoin and then look for the buy trade to the upside. Okay, yeah. So what does a flag pattern looks like if I were to kind of like take some example that has happened in the past, something like that. Okay, so maybe you want to wait out for something like that, and then that's where you can get involved in a buy somewhere around here. Of course, you need to adjust your risk accordingly. Are you a long-term investing or you're just short-term trading? Okay, and then your target here you can put all the way back at the previous high around 65,000. Okay, so this is my analysis and view on Bitcoin because I think quite a bit of you guys are actually interested in this. And I thought, just share with you my view on it, at least from a longer time frame perspective, around a 4-hour. Okay, if let's say you're trading even on an intraday basis, then that's where you need to have your proper analysis, your proper strategy. Okay, so this is my view on Bitcoin. Next up here, we'll talk a lot about gold and silver first, and then we'll jump into the FX pair, right? So XAU USD and XAG USD, these are basically gold and silver. Okay, first up here, big picture perspective, long term, I'm still bullish on these two commodities. Okay, personally, I feel again nothing has changed. Every week we come in, I still share with you my bias on these two commodities is still bullish. We are still looking for buy opportunities. We are already having 2 positions on gold and silver. Okay, and of course I'm aggressively looking for opportunities to add in again. Right, this is what we call scale in. Because I see there's a huge upside potential on these 2 precious metals. Okay. Now, if you're following some of the commodities market, you probably already observe a lot of them has already rallied last month, or I would say this month, right? For the past few weeks already, a lot of it has been rallying, but gold and silver has been lagging behind. Okay, eventually I still am pretty confident, okay, that gold and silver will keep rallying, okay, for the next 6 to 12 months. Okay, so within a year period, you can see huge upside potential on it. Okay, but of course, price does not just keep go up all the time, right? It does go up a little bit, come down, and then go up more. But generally, the direction that I would suggest that you want to focus on is upside. Okay, so gold here, same target. We're still looking out for the 2074 for our short-term first target. Okay, silver here, our first target here is due $30. It's getting closer. Okay, but I want you to see if let's say this level on the silver, the $30 mark, If let's say that's broken, the upside is going to be huge, right? And that's where you want to reference back to what happened in 2011, okay? And that high here is close to $50, okay? So both gold and silver, you have huge upside potential. Yeah. Now for this week, I think you might get a chance to get in. Just be a little bit cautious as of now, right? What I'm bringing in, you can see over here is the RSI divergence is already there. Okay. So what it means is that for the short term, don't buy into this high here simply because of the lack of momentum. Okay. So from an Elliott Wave perspective, this can be what we call an expanding flat. Okay, that looks something like that. Maybe coming back to this structure zone here, and then that is your buy opportunity. Okay, so if I were to put in a little bit of maybe Fibonacci here to guide you guys at some of the key zone that you want to pay attention to, okay, it will be something around there. Okay, you want to focus on this 1618, right? Most of the time, that's where the expanding flat structure would complete, right? Which comes in pretty nice because this is exactly where that previous high is. You can see that confluence. Okay, and of course, if you put in your Fibonacci retracement, that will be around your 61.8 Fibonacci as well, right? You can see that, okay, exactly to the dot. Yeah, so to keep things simple, I'll just keep it at 1618 over here. Okay, and that price point is somewhere around 1794, right? So I can, okay, you can see the divergence, right? So let me keep this. And you know, from an Elliott Wave perspective, this is what we label as ABC. Okay, of course, this does not need to happen, you know, exactly as what we have like share over here. This can still come down and then maybe just does something like that as a running flat, and then this goes up. That's perfectly fine as well, right? This is also a valid pattern. Okay, so what I want to suggest here is that maybe give it a couple of days. Today is Monday, right? The start of week usually is slow. Right? Maybe by Wednesday or even Thursday, if you start to see market doing something like that, very slow to the downside, that's definitely your buy trade to the upside, right? And how you can do it is just look for breakout. Okay, breakout of this corrective pattern, depending on where it develops, something like that. Okay, so don't have to overcomplicate the entire process. Just keep it simple, but generally the direction you want to focus is upside. Okay, and let's say this just keep coming down, somewhere around 1794 would be a good area to keep an eye for potential buy. Okay, so this is on gold. Silver here, pretty much similar here. You can see the reaction that we shared last week. But looking at things over here, okay, this can still develop into this three-wave pattern, okay, something like that. Because if let's say gold were to come down and correct a little bit, naturally silver has the same tendency of forming a correction, right? But perhaps just a different pattern, right? So from silver perspective, let me drop this in. Okay, this will be perhaps slightly different in terms of the pattern that we are looking for. Okay, it will be more of like a simple ABC pattern. Okay, something like that. Okay, a three-wave corrective pattern. Okay, and if this were to happen, then your area to look out for is $26.60, right? Okay, same thing over here. If this comes down very slow, then of course that will be your buy potential. Yeah, so gold and silver, every week I'm monitoring it because of the macro perspective. The big picture fundamental here is that dollar is likely going to weaken. Okay, and that's where we're looking for opportunity to ride onto it. Okay, if the dollar is weakening, you probably see inflation kicking in, devaluation of the dollar. That's where your commodities tends to be the hedge against this inflation. Okay, so that's on gold and silver, the two commodities, and of course we talked about Bitcoin just now, right? So in terms of FX opportunity for the day, today first here we look. Let me share with you the two closest setup that perhaps you want to keep an eye on. That will be on pound franc, and the other one here is on pound Canadian. Okay, so first up over here, let me share with you on pound franc perspective from a daily chart first. Okay, so over here you can see with the recent high, okay, over here we have this very fast push to the downside, and we get kind of like a consolidation for a couple of weeks. And with that, this is a pattern that indicates there's a higher chance of this dropping towards 1.2275. Okay, So on the daily scale, we know the direction is down. Okay, and that's where we go to a lower time frame like 4 hour or 1 hour to look for a setup. Okay, so from a 4-hour time frame perspective, some of you might even start to see that there's this potential double top formation. Okay, and from there we did see a very nice short-term rejection last week. Okay, and right now, if let's say this forms a correction, a flag pattern like that, that's a very decent trade for us to look for the downside. Okay, so over here, again, I don't want to impose any specific strategy or how to execute a trade, because all of us has our own different method to approach the market, right? But over here, I would say generally you want to focus on the sell side, but how you're going to execute that sell, it really boils back down to your strategy. Right? So some of you are using Fibonacci, retracement, breakout, some indicators to help you. Whatever it is, as long as it works for you, that's fine. Right? So over here, I'm looking at this more from a perspective of, again, Elliott Wave, and okay, so very similar to the silver pattern, right? It's just flip side, okay, opposite direction. Okay, and this is roughly how it looks like. If I were to put in some trend lines, okay, this is how it goes. Okay, your 3-wave WXY, and that's where we expect this to come back up, somewhere around here. That's our sell zone. Okay, and then what you get is, of course, this impulse push, a 3-wave correction, and again, every time we see a pattern like that, there's a good 60 to 70% chance this will work out. Okay, it's never gonna be 100%, but anything that is above 50, okay, something that has 60 to 70% probability, I think in trading, that's already good. Okay, so keep an eye on that. If let's say this one here you're interested, the level that you want to keep an eye is somewhere around 1.2750. Okay, look for the sell on pound franc. Okay. In terms of target here, we talk about it on the daily, right? Somewhere around 2275. Okay, so the downside is huge. Yeah, so keep an eye on pound franc. The other one here you want to look up for is pound Canadian. This is more on a smaller scale, like 4-hour time frame setup. Okay, so first up, you of course can see we do have this bottoming formation, right? Okay, and then of course we have this V-shaped impulse push to the upside, and right now this is more like forming a correction. Okay, and over here, some of you who are more experienced in technical analysis, you'll be able to start seeing that this drop maybe can also be what we call an inverse head and shoulder, okay, which is a reversal pattern, and from there, that's where you can trade the breakout to the upside as well. Okay, so again, there are many ways to execute a trade. You can trade the retracement, you can trade the breakout of the inverse head and shoulder. Okay, there are many ways. Okay, but basically, the direction that I would suggest you want to focus on for pound cat is the upside, right? Focus on the buy side. Okay, so same thing over here. If I bring you to the 1-hour time frame, okay, we are able to look at it from Elliott Wave perspective, either a 3-wave push to the downside, okay, perhaps something like that, okay, or you can even look at it from a simple Fibonacci retracement from the recent low here to that high. Okay, the 618 kind of like coincides, right, with our Fibonacci expansion here of ABC pattern, right? So you can see both of them are pretty much similar. Okay, so if you're interested in this particular setup here, the price point to keep an eye on is around 1.6970. Okay, so we are expecting 1, 2, and then of course this come back down somewhere around here. That will be a good area to keep an eye for the buy. Okay, so that's for you. For those of you who are trading maybe a retracement trade. If you are looking for the breakout, then you want to wait for this to come down, maybe come back up a little bit, does a small consolidation, okay, then you can trade the breakout over here. Okay, so you need to definitely see how price is going to develop, right? For this drop to happen, it might need maybe a day or two, maybe by tomorrow evening or Wednesday, okay, morning before London market, this setup might be ready. Okay, if you're interested to take this trade, then you can potentially put your target somewhere around 1.7585, okay, which is very decent upside potential, right? You can see the huge possibility of how much price can still go higher. Yeah, so keep an eye on this two here, right? You have pound franc and pound cat. I think this is the two clearest and cleanest setup for the week right now, okay, at this very moment. Okay? As the week progresses, market develops, things might change. Other pair here that I have it in my watch list is number one, dollar cat. Okay, let me bring you to the weekly scale first, right? Why I say dollar cat is important to keep an eye on is because you can see over here, okay, this zone around 1.2060. It's actually, this is on a weekly scale, right? So this low here is back in 2017. Right now we are retesting that zone, okay, around 1.2. So it's crucial because if let's say price were to bounce up from here, okay, the room to the upside you can see, right? Even if you don't aim all the way there, aim halfway, okay, it's still huge. Okay, so there's a huge upside potential. The room to the upside is huge. Okay? But of course, right now the question is more of like, is this gonna be bouncing off or is this gonna break through? Okay, so with that, we obviously need more information to work on. You can't make that decision, or can't, the chart on the weekly scale will not tell you. By the time it tells you, it's probably too late. Okay, so what we need to do is we start to work ourselves down to a lower time frame. Okay, maybe on a 4-hour scale, and that's where you can start to see a little bit more data. You'll be able to kind of give yourself more informed decision as to what's happening. Okay, so on a 4-hour scale right now, okay, we do see this mini rejection, but of course that's not sufficient, right? Because price can easily just keep coming down. Okay, so right now, based on what's developing, to me, the highest possibility of this developing is more of like a diagonal structure, or even maybe a double bottom structure. Okay. The minimum here we are expecting is at least a double bottom structure. Okay. But this can still develop into a diagonal that looks maybe something like that before that push, right? So it's not going to be just a double bottom, but it will be more of like a triple lower, kind of like lower low. Okay. So again, this might not give you a setup for the week, but I think it's at a very crucial level that I just want to bring this up, highlight this pair, so that for you guys who are interested, just have a very close watch to it starting this week, right? Because we are again at multi-year low. Okay, yeah. So dollar cat, not really much to pay too much attention right now, but just keep it monitored so that maybe next week you have a good setup that you can execute. Okay. Eurocad over here is pretty much similar to dollar cat. Okay, so you do see let me go to the daily first, right? You do see right now this is the pattern that I'm seeing on the daily. You have this strong push, and then from there you have this mini double top. After that, it starts to form a pattern like that, right? So this is a pattern that, a flag, right? And whenever we see this, we know that the chance to the upside is higher. Okay, it's about 60 to 70% that will happen. But of course, again, on the daily scale, you always need to know when to get involved in. Okay, so the direction on Eurocad to me is pretty obvious. We'll be focused on the upside. Okay, but the question is when we're gonna get involved, right? So we'll look at that on a lower time frame. Okay, on the RSI momentum, you do see from these two lows, we are getting that divergence build up as well. Okay, we suggest that you want to pay attention to a potential reversal setup. Okay, so all this simply point towards focus on buy. Okay, so on the 4-hour scale over here, what I'm seeing is that this seems to be slowing down, okay, on that drop. And again, every time I see a pattern like that, it's suggesting that the reversal is coming. Okay, so if I were to even go down to, let's say, a lower time frame on a 1-hour chart, okay, you want to be a little bit cautious first, okay, because you do see right now this is going up slow, right? Which means that you can expect a bigger corrective pattern that like that. Okay? So for me to buy, okay, I need to see this. Okay, I need to see the correction. This here is not a buy setup. Okay, this is more like a short-term sell. Okay, but of course I wouldn't be selling it because on a higher time frame we're interested in the buy. Okay, so simple technique over here, of course, you can use a simple Fibonacci retracement to give you some kind of like Fibonacci expectation. Okay, somewhere around 1.4660. Okay, that will perhaps be the zone for you to keep an eye on. Ideally, this comes down like that, right? 3-wave corrective pattern. That's the Elliott Wave classic ABC. Okay, so keep an eye on 4660. Okay, you might get this within the week. Okay, maybe by Wednesday or by Thursday you might get this. Okay, and of course, the target here, you can put it all the way back up at 1.5190. Okay, yeah. So you can see huge upside, right? Okay, simple kind of like risk to reward ratio, very rough. See over here, easily like 1:9. Okay, even if you kind of like lower it a little bit, maybe widen your stop a little bit, that's still 1:5.8, right? Very decent risk to reward ratio. Right? So keep an eye on Eurocad. I think this is another setup that likely within this week you might get this. Okay. On the other side, we have some of the yen pairs over here that I'm monitoring. Okay. We have CAD yen, Euro yen, and Pound yen. Of all this, I think Euro yen is the nicest of all. Okay, so we'll talk about Euro yen first. Okay. Let's go to the daily. Okay, you can see over here daily chart. Again, we have been monitoring this for a couple of weeks. We always say, you know, when you see this move up very slow, just cautious buying. Okay, you buy, you can still make money, but it's a little bit challenging, right? Because it's going up so slow. You might see, you know, a day where you are good in profits, and then a couple of days you are, you know, your profit starts to dissolve. Then you get a little bit worried, and then your profit goes up a little bit, and then comes down a little bit. You can still make money, but it's a very challenging phase. Okay. So I would rather sit out of the buy and wait for a sell, because you can see here the room to the downside is huge, right? So I'd rather focus on that. That's on the daily scale. On the 4-hour chart, you can see this is again very slow to the upside, right? And if I were to bring in the RSI, see a very obvious divergence too, which suggests momentum to the upside is dying down. I'm gonna focus on the sell. Okay. Again, there are multiple ways to kind of like execute the trade. Okay. You can look out you can look out for breakout. You can look for, you know, a more conservative approach where you wait for this drop, maybe form a correction, and then that will be your your head and shoulder pattern. Okay, before you take this trade down. That's possible too, right? So there are many ways really to execute trade, and okay, don't ask me like which is the best. Okay, there's no such thing. Okay? Whichever method that works for you, that's effective. Okay? So you can see, right, over here you can trade the breakout here. You can wait for this to happen, trade the head and shoulder pattern. You can trade this flat pattern. Okay? You can trade the breakout of this pattern. Just so many ways. Okay, but over here I think the direction that I want to kind of like emphasize on is to focus on the sell rather than the buy. Yeah. So keep an eye on Euro Yen. Okay, I believe that this drop here, at least this move, can happen within the week. If you're waiting for, of course, the head and shoulder pattern that develops something like that, okay, this head and shoulder pattern, you probably need to wait until next week. Okay, but of course, you need to also understand it does not need to give a head and shoulder pattern, right? It can be from here, it drops, a very quick correction, and then it just drops. Okay, so does not need to have a head and shoulder. Okay, so take note of that. If you are interested to capitalize on this first drop, it can happen within the week. Yeah, because you are already seeing this more or less mature, ready to go. Okay, so maybe it might start going tomorrow, Wednesday. Okay, honestly, I don't know the answer, right? But likely this week. Just keep an eye on it. Okay, Pound Yen is pretty much similar. You can see the patterns that's developing. Okay, over here on the daily scale, right? Same thing you can see. Okay, very similar, right? It's just probably different size of the pattern. Okay, so same thing. Keep an eye on the sell side. Okay, over here I would say this might still pop back up one more time before the drop. So you might want to be a little bit cautious for those of you who are interested or thinking about trading the breakout here. Maybe just be a little bit more patient. Maybe wait for tomorrow and see how it goes first. Okay, so this can pop back up one more time to form this, and then only that drop. Okay, so if you are looking for a breakout of this pattern, I would suggest wait for another day first. Tomorrow evening or maybe before London, come back to this pair here on a 4-hour scale and see how it develops, right? If let's say by tomorrow morning before London you come in and you see this push back up, right, and it starts to show sign of rejection, something like that, okay, and then of course that's where you can place a breakout somewhere here. Okay, that's a valid entry execution. Yeah, so Pound Yen basically pretty much similar to Euro Yen, right? More or less the same. CAD Yen is similar pattern, but you do realize it's not as clean as Euro and Pound, right? So I would say maybe, you know, this one here, you might want to just leave it aside. Okay, just focus on euro and pound. Yeah, euro and pound is way much cleaner than CAD yen. Okay, so maybe you just take that out. Okay, so that's that few currency pairs. You know, and of course we talk about commodities, gold and silver, and Bitcoin very, very briefly, Bitcoin, right? If you take a look, for those of you who are more interested maybe in the indices, right? Yeah, the market just opened, right? 9:30. Not much of a move today. Okay. Again, Monday are usually quiet, but you know, you do see this rebound, right? Which I talked about on Friday. It's pretty strong rebound. But you get the phase. Some of you who are more active in the stocks market, you probably hear this phrase before, right? Sell in May, go away. So statistically, okay, I'm not sure how many of you actually went and do the proper research. Statistically, it's not 100% that, or I would say statistically, if you sell in May, you're gonna lose money. Okay, so the idea where the phrase comes about is not really to sell the market in May, but it's more of like the market tends to be quiet, sideways in May, right? And it's still up, it's still positive, but it's positive by very, very little, right? And that's where in the past, people just say, you know, let go of your stocks in May. Maybe, you know, don't look at it, don't worry about it. Then only come back after May, right? So it's not really go and sell the market, right? Because those of newer traders or investors will probably hear this phrase and they start to think, okay, May, sell it. Okay, no, because if you're gonna sell in May over time, statistically, you're gonna lose money. Okay, just the phrase comes about because May is just basically a choppy month. It's a month that literally you don't really make much profit. You won't make much losses, right? And what you see over here on the chart right now is doing exactly that, right? Since May, you can see, right, this is beginning of May. Okay, somewhere here we do make some profits, we make some drawdown, and then we are back at where we are. Okay, so that's the idea of it. Okay, so if you're looking at the stock market, I would say big picture perspective, this year itself, unlikely we'll see another crash. Okay, when I mean crash, we are talking about something that happened back in 2020, something like of this scale. I don't think that will happen. Okay, of course we'll see correction, but I don't think we're gonna see a crash like that. Okay, perhaps a scale of a correction that looks something like that, perhaps. Okay, something like that. But it's not gonna be a 30% drop. Right? Of course, nothing is 100%. So when I say that we are not expecting a crash, it's more of like maybe about 80 to 90%. I'm confident that the market is not gonna crash. Okay, but there's still that 10% I can be wrong. So I would suggest that for those of you who are perhaps looking to trade indices, the stock market, or even invest in the stock market, okay, you can still look at potential buy opportunity, right? It's not like it's gonna end. Okay, why I say that is because we are still seeing the Fed keeping interest rate very low. We're still seeing the Fed continuously printing money, right? And that will keep the stock market supported. It's still gonna keep the market higher, right? It's gonna push the market higher until the Fed starts to show sign of tightening, which means starting to increase interest rate or starting to taper, right? Slow down the print of the money. When you kind of hear or see this kind of news, okay, so you need, if you're in the stock market, you need to keep yourself updated to what the Fed is doing. Now, if you start to hear a little bit of all this news where the Fed is starting to taper, starting to increase interest rates, starting to do tightening, these are some of the keywords, right? Just be very cautious of the stock market, because then we'll see that major maybe correction. Okay, yeah? So that's my view on general stock market. Okay, hope that helps. Good. All right. So with the remaining time over here, okay, I'll open up the session for Q&A. Okay, and I'll keep an eye on some of the questions that you guys have. And you know, now's the time for you to ask any questions that you guys like to clarify a little bit more, right? Anything with regards to like trading, investing, feel free to do that. Hey, so let me take a look at some of the chats, or I would say questions that you guys send in. Okay, I see one of you are asking about gold, right? Okay, I see that. Asking if gold will drop to 1830. Let me look at it. Okay, if you are if you are looking at 1830, I think you are looking at a very small time frame. Yeah, then I think it might be the case. 1830 is just basically, yeah, okay. Now if you are looking at gold dropping or coming back to 1830, I think the possibility is there. Okay. Of course, 1830 is really not a huge move. Okay. So even if this starts to do that correction, it might be able to touch 1830. Okay. But generally, I would say the momentum to the upside for commodities, especially the precious metal, is going to be there. Okay, so I would say it's safer for you to focus on buy setup compared to sell setup. Yeah. Uh, Good. Okay, so I also see a question from Duan Jaya. Okay, send in the question asking, after we know the direction of the market, do we need to use multiple time frame to enter? That really depends on the strategy, right? For me, I always suggest that as a trader, you want to have at least minimum 2 time frame, and that's what we call a higher time frame and then a lower time frame, right? So I always use a higher time frame to give me a bigger direction, okay, as to whether I want to focus on buy and sell. That's where the higher time frame comes in. The lower time frame is gonna be where I look for the execution, right? When I'm gonna put my entry, where I'm gonna put my stop, where I'm gonna put my target. Target usually based on higher time frame. Okay, so minimum, you might want to play around with 2 time frames. Of course, again, if you're only basing on one, then your stop loss, your entry might not be optimized. Okay, which means that your risk to reward might not be very worth it. Okay, so if you're playing around with like different time frames, you're able to scale it, go down, maybe on like 4 hour, 1 hour to execute it, then your stop loss will be very tight and your risk reward will be very worthwhile. Okay, so that's the idea of it. Okay, so I would suggest that keep it at least to 2 time frames, but don't overdo it, right? I see traders like from daily go down all the way to 15 minute. Doesn't make sense, right? If you're trading on lower time frame, you're more like intraday. Like if you're trading 15 minute, you're taking trades based on a day-to-day movement. Okay, then you don't need to look at daily chart. Okay, so don't overdo it, but have at least a minimum of 2 time frames. Yeah. Good. Okay, so I see some of you are asking about Nasdaq, right? Nasdaq over here. Okay, pretty much similar with S&P. Okay, but you do see that massive sell off, right? Okay, again, a lot of all this movement in the Nasdaq is because of tech sector, right? Technology. And if you're very active in the market, especially in the stocks, right, you might hear phrases like growth sector, value sector. Okay, basically what this is like you have like Warren Buffett, okay, which is the face of value investing. Okay, so he only invests in stocks that he call it having a value. Okay, and then of course you have the other side, which is growth stocks. Okay, stocks that are maybe has the huge potential of growing. Okay, so I give you an example. Coca-Cola is a company that falls under the value sector. This one very obvious, right? Because the growth of Coca-Cola will not be very fast anymore. It's already a very mature company. Okay, that it has limited growth potential already, right? It's still very sustainable, very solid, but it's probably not gonna grow a lot from here. Okay, so it becomes a value company. Okay, it has strong fundamentals. It's good as a business. It's very sustainable. It has value. Okay, so Warren Buffett loved this kind of company, right? And then you have the other extreme, which is like growth. Okay, where the best company to put into the growth sector is Tesla, of course. Okay, where Tesla has a lot of future potential, But honestly, if you go and take a look at the balance sheet of Tesla, hey, this one I think you guys probably already also know or hear about it. Tesla actually made more money from Bitcoin trading than producing electric vehicles. Okay, so that's funny, right? Tesla is a company that is focused on producing EVs, electric vehicles, but it made more money trading Bitcoin. So that's okay. I'm not saying that growth company means they need to trade crypto. Okay, I'm saying that Tesla itself, from a company point of view, from its operation, it's not doing very stable in its profit. Okay, if you take a look at their financial statement, it only start being profitable in 2020. Before that, they're burning money. Okay, they're basically losing money, right? Their net income is negative. But the stock price has been shooting up, right? So that's where growth sector, growth companies is, okay? Where the investors, the traders are basically betting that this company has huge future potential, and they are trading based on the future. Okay, that's what we call growth. And why you have this two comparison of growth and value is because when the market is uncertain, okay, which is what happened for the past couple of weeks, right? That's uncertainty where suddenly you are starting to see a little bit of worry in the financial market, and then of course also with like COVID, getting worse in multiple countries and things like that, getting into lockdowns and things like that, right? That's where your value sector performs, okay? And then of course, when the value sector perform, where does the money come from? It's gonna come from somewhere, right? And most of the time, probably come from the growth sector. So money will exit the growth companies and then enter into the value companies. Okay? And that's where you see growth drops, value goes up. Okay, and of course, if things starts to get better again, the money will flow back in, right? And that's how it happens, right? So if today you're looking at it, you can see from S&P point of view, and of course from Nasdaq. Okay, the S&P didn't drop as much as Nasdaq over here. Okay, so I want to show you this, right? So you can see S&P actually rebound back quite significantly, back to almost like half or like close to its recent high. But Nasdaq rebound wasn't as strong, right? Okay, you can see, right? So the idea of it is, of course, a lot of this drop in Nasdaq is due to tech sector, and that's where I want to share with you, right? When you're looking at Nasdaq, you need to understand that the movement of this driven mainly on Nasdaq is driven more heavily based on the growth and technology sector. Okay, so that's something that I thought is important for you to understand. Okay, but overall, I think if you're trading, of course, you want to wait for same thing, a correction here, and then look for the buy. I wouldn't suggest you to go and sell it, okay? Because if you're looking at indices, the general direction is always up. Okay, take a look at that, right? It's every time gonna break all-time high. If you're looking at indices, it's simple. Okay, it's always buy direction. Just focus on buy, but of course, don't buy anywhere, right? Just you need to time it a little bit better so that you can avoid this kind of big correction, right? This kind of big correction. But the basic idea here, if you're looking at index, always look for buy opportunity. Yeah. Great. Okay, so let me. I'm seeing some of you are asking for some FX pair here. You have Euro Franc, Euro Kiwi, and Pound Kiwi. Okay, let's take a look at that. Euro Franc. Okay, great. I think Euro Franc from this scale here, I would suggest focus on the buy. But understand that this pair is, the nature of this pair is just going to be choppy. Okay, this is what happened most of the time, and this is very rare occurrence. Something like that is very rare. In a pair like Euro Franc. Okay, so you do realize that, right? I just scale out, you can see. Okay, this is like once in a blue moon. This here is once in a blue moon, right? This impulse. Okay, this again is once in a blue moon, right? Other than that, it's always you see up down up down up down up down. Okay, so this pair is not my favorite pair to trade, but if you're looking for it, focus on the buy because of this pattern. Okay, and of course here you have this smaller one here as well, right? Because of all this pattern, I would say the probability is due to the upside. The target here you can potentially aim for is around 1.1150. Okay. Of course, right now the closest setup you want to wait for is either a potential double bottom, okay, or you wait for this to come down, form a pulse up, and then a correction. Okay, you either wait for this or you wait for the double bottom. Okay, so that's the closest setup for Euro franc. Okay, for Euro Kiwi and Pound Kiwi, look, I were to clean up this Euro Kiwi on a daily scale, you can see the pattern here. Okay, likely is something like that. Okay, so if you're looking at it from a daily perspective, you can target this high. Okay, so you might want to look out for something like that. Maybe I'll round up a little. Okay, so you might want to look out for this 1, 2, right, somewhere around here. So daily scale on Euro Kiwi is showing upside. Okay, on the 4-hour chart is, you can see, right, very choppy. Strong push up, a strong push down, go sideways, strong push down, and then almost instantly come back up, and then over here it forms a V hit. Whenever I see a chunk like that, very difficult to trade. Okay, so I would suggest what you want to do is perhaps you need to give it time. At least we have this here. Okay, so you might want to see if this forms a correction this week. Okay, if let's say this forms a correction here, then you have a solid trade to the upside. If not, nothing. Okay, really nothing on Euro. Pound New Zealand. Okay, daily here. Again, you can see this is the analysis we've done last week. Okay, keep an eye on the target of 1.8525. I would say on the daily here, the direction is still down. On the 4-hour chart, okay, again, what we are seeing here is we have this push down, very nice, but almost instantly it came back up. So we need to give it more time, right? This V shape is not a trade. Okay, you don't trade the V pattern. Okay, you don't trade a V pattern. So wait for this to show maybe sign of exhaustion. Maybe let's say a divergence with a diagonal, a crawl pattern like that. Then you can look for a sell. Okay, and then what will happen is this one here will probably be that double top. Yeah, this top, and maybe somewhere here this top, right? So again, for this pattern to develop, probably need an entire week, okay, because it's gonna go slow, right? So this week here, I don't think you might get a setup on Euro Kiwi or Pound Kiwi. Okay, unlikely you get a setup, but maybe you give it this week to see how price develop, and then maybe next week get a setup. Yeah, so that's my view on it. Okay. Great. Okay, so I'm seeing question here. Any short-term trade on pound dollar? Okay. Okay, I'm not seeing any good setup right now. Unless you, I wouldn't even suggest that. Yeah, it's not a setup that I would take, but basically you can see here, this consolidation, a break, and then right now it retraces back to this. You can consider for some short opportunity, but this is not something I will even take it, right? So I wouldn't suggest that. Yeah. Yeah, honestly, I wouldn't force anything, but the closest I'll probably consider a trade is if this comes up slow and it comes back up to this zone here, okay, which is around 4165, right? Until that happens, I honestly will not even consider any trade on pound dollar. Yeah, I hope that helps, right? Because over here I really do not want to kind of like force any trade in. Okay, so I see a comment over here, saying that I was selling gold and now gold makes me have heart disease. Okay. Now, first off, over here, if you're getting emotional over your trades or your trades are affecting you, something's wrong. Okay, not about the market, but something's wrong about your risk management. Okay, because at the end of the day, whenever you trade or invest in the market, you need to be so comfortable with the risk that you're prepared to lose that particular trade or that particular investment, and you're perfectly fine with it. Okay, so if today you are feeling anxious, you are feeling nervous, you are worried, okay, basically any of this negative emotions that you're having based because of the trade that you just take, you're basically risking too much, right? That's a very obvious sign that you need to reduce your risk. Okay, so do take note of that. Yeah. Good. Okay, so Jimmy asks, okay, so I see a question here, so very good question. Can we combine correction with Wyckoff pattern? Now I did study a little bit about Wyckoff, okay, but just maybe to clarify, I think to share a little bit with you guys here, Wyckoff basically talks about accumulation phase and distribution phase, right? And I want you to know that a lot of all these studies, right, actually came or originated from the stock market. Okay, so you have like similar principles are like um, the volume spread analysis, right? We call it VSA. So it stands for volume spread analysis. So the idea here again also originated from stock. Okay, so first off here is that if today you are basing on volume to do your analysis, so it can be like market profile, volume profile, accumulation, distribution, DSA. These are the methods, the methodologies that are heavily reliant on volume analysis. So it originated from stock. So if you're using it in the stock market, it's fine because the stock market is a centralized market. The volume is actual volume. If you're starting to kind of like take that method and apply it into a decentralized market like FX, like crypto, it might not work as accurate. To a certain extent, it still works, but it might not work as accurate as the stock, okay, as a stock market. So understand that, okay, but you can still use those principles to help you in your analysis. Okay, I don't really go very in depth in studying Wyckoff accumulation distribution, but basically is I think the principle is more or less similar, right? So you probably have some kind of like distribution phase, then a sell-off, then a pause, right? And then where the logic here is that the big boys will make the market go sideways so that it traps retailers in, squeeze that liquidity, and then it's gonna push the market again. Okay, so roughly that's the principle, okay, which is where you see your impulse and correction happening. Okay, so more or less they are kind of like related, but I didn't really go very in depth into Wyckoff, so I can't really say exactly like how similar it is, but I just read it, study it a little bit, understand that there's this accumulation distribution phase, and then you have that push off phase, right? So more or less similar, okay, in terms of impulse and correction. Yeah. Great. Great. Okay, so I hope that helps. We have another question. Obviously, press on Cat Frank. Let's take a look at that. Okay, if you're looking at Cat Frank, I would suggest focus on the downside. Okay, on the 4-hour chart here, you can see this pattern. Okay, it didn't really touch that previous high, right? Ideally, if this would have touched that, I would have loved it, but it didn't. Okay, that's a bit like what we call like wasted. Okay, in Malay it's like sayang. Okay, a bit sad, right? Because if this has kind of poked through it and break that, this is a solid setup I would take. Okay, but it didn't, right? So not that this is not gonna be a good trade, just that the probability is not that high because most of the time price tends to break the previous high and low. Okay, so this can easily still go back up, break it first before come down. Okay, and then that would be a very big pattern like that. So I would say it's still downside. Okay, it's more of like, would this be ready to drop from this pattern here, or would it come back up here and then drop? Okay, so I would say focus on the sell. It's just a question of they're gonna focus on this sell pattern here or here, right? Just where, okay? So that's my view on cat franc. If you're looking at the target, I think you can easily put it around 7310. Okay. If you're looking at the high here is about 7530. Okay. If you're looking at, let's say, this little correction here, around 7470. Yeah, around there, right? So yeah, so there are two zones that you can keep an eye on, right? But for me, I wouldn't pay too much attention on this pair at this moment. Okay, for this week, I think I'll keep it aside, and not pay too much attention. But for those of you who are interested, I would suggest on the downside, focus on the sell, either at 7470 or look at 7530. Yeah. Good. Yeah. I don't really do any public Telegram channel. Okay, I don't really use a lot of Telegram nowadays. But if you'd like to, you can follow me and reach me on Facebook or Instagram. Just make sure you type the correct one, right? Just search for my full name. Okay. Right. Okay. Just on Facebook, on Instagram. Okay, just make sure you type my full name. You'll be able to find my profile. Okay, and connect with me from there. Okay, so Facebook, Instagram is fine. YouTube also can, right? So the idea here is that I don't really do a lot of Telegram, so use other social media platforms. Okay. Hey, gold trade is flying. I would say don't get scared by movement like that. Okay, honestly, yeah, okay, so don't really get afraid of this, because if you're looking at small time frame, 15-minute, 30-minute, price is definitely gonna move. Okay, but I would say one tip over here is perhaps move up to a higher time frame, and you start to see that that's not really huge, right? So if you're fairly new to trading, again, I will always suggest stick to higher time frame. It's always easier to trade on a higher time frame. Yeah. Good. Okay, which trade am I in right now? Okay, so in FX, right now I do not have any trade in FX. Okay, but just now I shared with you guys two trades that we are looking out for. Pound franc and cat franc. Definitely these two I'm personally looking to get involved in. But FX side, I do not have a trade. Okay. For commodities, I'm in gold and silver, but I'm looking at ETF. So I'm actually involved in GLD and SLV. Okay, they are basically your gold ETF and silver ETF. I have already two positions running on GLD. Okay, you can see over here, these are the two entries that I have. And of course, SLV over here, I also have two positions in. Okay, but of course, SLV, one of it is here, the dotted line, and then another one I kind of entered somewhere around here. So one of it is in a small loss right now, and then the other one is running in this profit, right? So for gold and silver commodities, these are the two positions I have. FX this week, not yet involved in any position. Usually Monday is slow for FX, okay, or generally the market. So usually there's not going to be very active trades happening on Monday. Okay, but do keep an eye on pound franc and pound cat, right? For those of you who are keen, I think this setup here will be two trades that might happen within this week. Yeah. Yeah, I don't do. Okay, so the question is short-term trades, right? I don't really do short-term trades, okay, because again, I'm not a fan of like sitting in front of the computer and trade all the time. Okay. My daily routine is I spend about like half an hour to 45 minutes a day for setups. Then that's about it, right? I don't really look at the market after that. And then of course, if I'm doing something like that, right, we come in, spend about 1 hour, and then that's it, right? I don't look at the market already. Okay, that's my style. So I don't really do a lot of short-term trades, right? Not my kind of style. Okay, so if you're looking at that, then definitely really find a method that works for you. Yeah. Good. Good. Any other questions that you guys have, right? I hope this sharing over here is able to have like help you and give you some perspective of the market. Yeah, I mean, good sharing over there, right? If today, again, I mentioned, right, it's a telltale sign, okay? If today a trade is affecting you, okay, emotionally, psychologically, you're not able to kind of like switch off your comm, you're not able to do something else because of that trade, you're basically just risking too much, okay? And over here, just wanted to share with you, right? There's this psychology I would always share with traders is that there's this $1 only psychology. Okay, so to share with you a little bit more in detail, right? Imagine today you walk on the street and then you drop $1. Okay, I think doesn't matter what currency, right? It can be US $1, it can be Malaysia $1. It can be, let's say if you're in Singapore, you drop $1 Singapore, right? Whatever currency you're in, okay. Imagine you drop $1, okay, and that dollar basically dropped into the drain, and that's what happened. Okay? And in order for you to recover the $1, you need to go through a lot of hassle, maybe dirty yourself, go down the drain to pick up the dollar. Then the question is, will you do that? Okay, most of the time I would say, even I'm very confident and say that 99% of the people would say, yeah, it's just $1. Let it go. Okay? So why I want to share with you this mentality is not about like belittling, or it's not about, oh, money is not worth it, right? It's not. It's about that part where it's so small that you will let go of it and not harp onto it, right? If you drop $1 today, you won't let that affect your entire day, right? You probably go on with your daily lifestyle, then that's it, you forget about it. So this mentality, this psychology is so important when you approach the financial market. Every trade you take, okay, should be that mentality. It should be, okay, it's only $1, right? If you lose that trade, okay, it's only that one loss, okay? So of course, it's a process, it's a journey. If you're starting out, maybe your $1 psychology can be, really $1. Okay, some of you who are a little bit more experienced, your relationship with money might be different. Okay, your $1 psychology might now become like $10. Okay, and then eventually it becomes $100. Eventually become $1,000. Okay, so it's a journey, it's a process, but you need to find that $1 only psychology. Okay, which means that every trade you take, if you lose it, it's just like that. Okay, nothing. Okay, so you need to reach that point. Then okay, this is the comfort level I have with money at this moment. Use that to factor into your risk management. Okay, and then eventually you start to grow that relationship, right? You start to not comfortable with money, you start to be more comfortable with risk. That $1 will increase to $10, to increase to $100, and then eventually maybe you reach the point where you take a trade and you lose 1,000. Okay, that's okay, right? To you, that's just $1. Okay, so that's the part where I think is very important for all traders. Okay, because a lot of times when you go, you search up about risk management, it's all about the math, right? How to calculate lot size, position sizing, and things like that. But this part here where I just share with you is a little bit more on the emotion management, right? And I think it's very, very important. Okay, so you need to find that balance, okay, to really help you. Okay, so don't rush in this whole process of trading. Okay, a lot of people come in thinking that I want to get rich fast, and what happened next is they lose even faster. Okay, that's the idea of it. Good. Yeah, so as what Ian you actually mentioned, you definitely need to work on that risk management and psychology aspect. Last one, Adrian asks is on US NZD USD. Look at that. Okay. So you do see some of my drawing over here, right? Basically, those are longer term perspective. Doesn't mean you immediately jump into the sell, right? So over here, yep, the sell side is generally the direction. Okay, but for now, there is no setup to sell. Okay, you can see, right, on the 4-hour chart, it's basically strong down, strong up, strong down, strong up. Okay, whenever you see V shapes or inverted V shapes that look like that, just stay out of it. Okay, you need more data to work on it. So the idea here is, let's say from here it starts to go back up and then it starts to crawl. Okay, then that's a setup. Okay, and then what you have is like a triple top, right? Then you can look for a sell. Okay, I would not suggest for any buy right now, simply because if you take a look at the daily chart, okay, we still have this bigger pattern in play, right? So this can still develop into something like that, and from that drop, it's still gonna be a head and shoulder pattern. Okay, so higher time frame is still suggesting downside, but on the smaller chart, smaller time frame, you need to be a little more patient on. Okay, so that's on dollar. Yeah. Good. Okay. One more question over here is asking, how did we exit pound dollar trade we took last week? Basically it was a break-even trade. Okay, so I believe depending on when you actually saw this, I believe we shared about this breakout entry, right? Again, very simple entry execution method. Okay, so we are looking at a big picture to the downside, but of course market did not give us that, right? But it gave us this little push. Okay, so you need to definitely manage your trade. You can't just say, I leave it there and then forget about it, right? When you enter the trade, you need to manage it. So that trade, we actually, shift our stops to break even, and then of course we got out and break even. Okay, so it's basically a flat, like no win, no loss, right? Things like this happen, okay? It's not gonna be every trade we share is gonna be making money, right? Some trades are gonna lose money as well. Okay, and of course you need to also be need to understand that when we share it on Monday, things might develop differently by Wednesday or Thursday. Okay, so you need to also acquire the ability to understand how to read a chart. Okay, so that's something that, again, it takes time, it takes a process. It's not gonna be something that you will learn overnight. Okay, so hope you understand that perspective. Yeah, good. Hey, right, we are running a little bit over time, okay, but I'll share with you the last one here. I see someone asking about dollar. Okay, so fundamentally, no, without the chart, fundamentally, I would say dollar here is bearish. Okay, you want to focus on the sell side because of how the Fed is really printing money. Okay, but from a technical point of view, okay, at this moment here, I think it's still supporting to the downside. Okay, from dollar index perspective here, you can still keep an eye on 8920. Okay, so I think it still has room to fall, but when it comes down to 8920, which is here, right, this white line, okay, you want to be a little bit cautious in selling already, right? So the idea here is, for short term, if you guys are looking for dollar index or the dollar related, there's still room for it to fall towards $89.20. Okay, but of course, don't just sell now, right? You need to have a proper strategy to execute. Okay, to me, the closest setup right now on the 4-hour chart is something like that. Okay, something like that. Okay, so you probably need to wait for one more push. That's a proper setup for me to sell, right? Of course, you might have your own execution method. Okay, so the idea again is same thing. I think you want to focus on downside, but once it reaches around 89.20, just be very cautious, and see how it develops from there. Because when price comes back down here, fundamentally things might also change. Maybe the Fed decides to start tapering, starts to do tightening. We never know, right? But we need to keep an eye on it. Yeah, so that's on that. Hey, okay, I see some good question, right? So let me answer them. Then we'll call it a day. Okay, so we have a question over here. How to practice on a demo account to increase the accuracy of the analysis and how to trade under $20 account. Okay, so first off over here, demo account has its strength but also has its weakness. Okay, demo account is basically a fake account, right? So it's good for you to practice your analysis method, but it's not going to train you up from a psychology point of view. okay, because it's fake money. You don't feel anything, okay. So the downside is if you're practicing on demo account, you're never gonna work on your psychology until you transit into a real account, right? So definitely you need to factor that in, right? So if you are still in the phase of like getting used to technical analysis, getting used to maybe playing around with the platform, executing trade, play it on the demo account. But when you want to transit into being like really a trader, you need to work on psychology, and that's where you need to go into a real life account, okay? Because that's where money is really involved, right? That's where you say you get a skin in the game, okay? And the part here where if you're looking to trade with an account of $20, okay, honestly, it's very difficult. Okay, in fact, what I would suggest is don't start trading with your $20 account. Okay, maybe you need to start to build up first, right? If today, let's say you're still you need to plan a little bit on your finances, then don't get yourself into trading first. Don't rush into it, right? If today you are only prepared to trade a $20 account, it's very difficult to trade. Let's say the smallest lot size over here is 0.01. Okay, with a 10 pips of move, that's already $1. Okay, and if you put in a percentage of your account of $20 capital, that's huge, right? So it's very difficult to trade. Okay, so I would suggest a minimum, bare minimum, maybe it's somewhere around 100, okay, or even like close to $200, okay, to get started at least properly, right? And so I would suggest you might want to work on that. Yeah, so do take note of that. Okay, it's very difficult to trade an account of $20. Another question about if you should take the FTMO challenge. It really depends. Okay, I've seen some of the traders that I personally know actually took it and succeed, right? So they passed the test. But I've also seen a lot of traders actually fail the test. Okay, and if I'm not wrong, they charge for it. Okay, and it's not cheap, right? I think it's about $250 to take the test, and there are certain requirements. Okay, I would say if you're new, don't take it. Okay, it's not gonna help you because of the criteria that they require you to fulfill. Number two, if you are a swing trader like me, you might not be able to perform in that FTMO challenge, right? Because why? They're looking for a certain number of trades. That's how prop firm works basically, right? They want you to trade, okay? So again, if like me, you know, on average, maybe a week I only take 1 or 2 trades, okay? I'm definitely not gonna pass the test with that. Okay? So you need to know your style and whether you are fitted for that, right? So FTMO is a very good example of what a prop firm really is. Okay, it's just that they don't have an office, you don't go into office, but basically you are more like working from home, but essentially you are a prop trader if you are trading with FTMO. Okay, and that's how prop firm works, right? They need to have a certain criteria, you need to fulfill them before they are able to pay you and award you. Okay, so it's fair because they are taking the risk on your behalf. They are paying you, they are rewarding you, but you need to meet a certain condition. Okay, so it's a give and take, right? So you again need to go and check. Number one, if you're brand new, obviously you're not likely pass the test. Number two, your style, how you trade, whether you are fitted for that. Okay, that's also pretty important. Yeah, so that's the idea. Good. Okay, so that's all from my side today. Okay, very good questions that you guys are asking, right? And I really hope my opinion here is able to help you guys. Yeah. So that's all from me, and have a good night and great week ahead. And we'll come back and share with you more next week over here. Okay, so that's all. You guys, bye bye.